नमस्कार, फिर पैसा बोलता है में आपका स्वागत है। वेलकम बैक टू पैसा बोलता है। Today, TCS announced its results today. Infosys and HCL are supposed to announce their results. What did I take of the TCS results and what do I think will happen in the market? Well, what I took out from the TCS results was that this year is going to be a year where IT companies are not going to grow at breakneck pace. This is because there is definitely an expectation of slowdown in America, and corporate America is not spending the kind of money it would like to spend on IT. They are rather spending on money on maintaining things than developing new projects. So it is to be expected that TCS would have given modicum results. And you should also realize that TCS is a large company, a company which makes $1.2 billion profits every quarter. Profits alone lead the company to something like $4.5 billion in profits. Such a company cannot keep growing at breathtaking pace of 15 to 20% every year. This quarter, profits have grown at 8%, which is fairly satisfactory. What are the worrying things I saw in TCS results, which it will get accentuated when the other results come? Today, I'm expecting Infosys and HCL to announce results. The attrition rate in TCS was much lower. It is today at 14%, which is much below than the average of 17%. That means only 14% of TCS employees have looked into switch jobs. What was worrying is the recruitment of new people in TCS was far less than the attrition rate. Hence, the number of people employed by TCS reduced by 6,300 people. This is only the second time in the history of TCS as a company in a quarter where number of people have contracted. What does this mean? That even the mighty TCS, which has very generous labor policies in IT when compared to other companies, is now not recruiting people. A person told me once in jocularly that TCS can cut 30% of its staff and still maintain same profits and turnover. TCS staffers have told me the job is safe, but the salary is 70% of IT levels. Even such a generous employer is now willing to let go of people and not try to retain them, at the same time not replacing people. But today the results will come from two other companies which have no qualms in letting go people and telling them they are non-performers and be very careful in recruiting people. So what it tells me is this year's IT profits are going to come from cost cutting, not from great turnover growth, not from volumes, but from facts that at the same or slightly higher volumes, they are able to deliver better margins. The only major input cost in IT companies is manpower. If they can produce the same kind of results with lesser manpower involved, they are going to show more profits. That is what TCS results is indicating to me, and that I expect the trend to get confirmed with both Infi and HCL technologies. That is that this sector, which was creating jobs, is not in a position to create jobs, has to become more efficient, and therefore the profit margins will go up, and even with slight increases in turnover, the profit margins will be much higher. This is very clear. Second, the funding winter is going to continue, and which I have been saying will continue for the next 18 to 24 months. More startups will shut down. More prominent startups like Byju's will continue to be in trouble, and they will not be companies which do not make profits or positive cash flows will find it extremely difficult to survive. Economists had an article which clearly said that Uber and Lyft will never make money in the foreseeable future. With the rates moving from 4 to 6 now instead of from 0 to 2. By rates, I mean the Federal Reserve interest rates. It is very difficult for private equity companies to fund companies which are making perpetual losses. So you will see a lot of shutdown happening. Already Ola has fired a lot of people. Lot of startups have shut down. So you will find lesser and lesser people joining startups and startups letting go of people, because cash burn is going to become very difficult in a time where I can put in a risk-free return of 5 to 5.5, 5 to 6% return. I am not going to borrow money at a higher cost at 7 or 8% and sink it into startups which have no possibility of turning profits. So startup valuations are going to crumble. Most of SoftBank's problems come from that. But still, I ask you to consider IT for two reasons. One, the dollar will continue to strengthen throughout this year and next year. And because the dollar will continue to strengthen, you will find that the rupee will depreciate. Already the rupee has depreciated nearly 1% in the last 6 months. You can expect a rupee depreciation of another 2 to 3% this year, followed by another 2 to 3% next year. A combination of job cuts or lower recruitment, whichever is more palatable to you, and the fact that the dollar is is going to depreciate is going to give cost advantages to IT companies and make them more profitable, and they will generate more cash flows. All IT companies give away more than 70% of their revenue, of their net profits as dividends. So you can expect regular cash flow. So which IT companies would I consider? I find at current valuations TCS to be very expensive because its dividends are higher and its buyback is more generous. Share purchases buyback is more generous. They are now buying back 17,000 crores at 4,150 apiece. This is because the mighty Tatas want money to invest in other businesses. They own 73% of TCS. Therefore, on a pro rata basis, 73% of all money distributed either as dividends or share buybacks is going to Tata and Sons. Infosys will be less generous in share buybacks but will be more generous in dividends. Therefore, you can look at buying Infosys because the valuations for Infosys look much cheaper than the valuations of TCS. At the same time, the valuations of HCL Technologies also looks compelling. HCL Technologies is the most cost conscious of this group of companies, with the promoters relinquishing control and the professional CEO in a position to make more ruthless decisions. So at current valuations, it makes sense to buy Infosys and to buy HCL and avoid TCS. At current valuation, it makes better sense to consider ITC and HCL at the cost of TCS and Tech Mahindra. But over a longer period of time, if one is patient, you will reap dividends in investing in Infosys, HCL or the IT index as the rupee weakens and IT spending returns. Even if IT spending returns, the days of buccaneering startups are over, and I don't see them returning to their old glory in near term. But for our investment strategy, a mature company which keeps delivering increased cash flows and makes more efficient use of its resources is very valuable. So if your investing returns are measured in Indian rupees, it makes great sense to invest in Indian IT stocks and pharma because more than 70% of their revenue would come in US dollars. Thank you for watching पैसा बोलता है. आपने इस पॉडकास्ट को सुना, इसके लिए मैं आपका आभारी हूँ. अगर आपको इस वीडियो पसंद आया तो इस वीडियो को लाइक कीजिए, शेयर कीजिए, अपना कमेंट्स नीचे लिखिए. हमारे चैनल को जरूर सब्सक्राइब करें और बेल नोटिफिकेशन दबाएं. अगर आपने बेल नोटिफिकेशन नहीं दबाया तो आपको ये नोटिफिकेशन नहीं आएगा जब हम एक नया वीडियो अपलोड करेंगे. धन्यवाद, नमस्कार, जय हिंद. मैं हैदराबाद में एक इवेंट करने वाला हूँ 28 अक्टूबर शनिवार को 4:30 से 5 बजे तक. जो उधर मुझे मिलना चाहे वो नीचे दिए हुए जीमेल आईडी में और व्हाट्सएप नंबर में कांटेक्ट कर सकते हैं. hyderabadmoneypage@gmail.com उसका ईमेल एड्रेस है. मैं आपको हैदराबाद में मिलाऊंगा.